Supermicro computer stock is down big in the past 6 months. It's lost almost half of its value. And today I'm going to look at whether it's worth buying the stock right now. On a year-to-date basis, it's still doing fairly well, up almost 70%. But with the recent sell-off, it's trading around where it was back in January. So it could be potentially a good opportunity for investors to buy the stock. But let's take a closer look at why it's struggling and whether it could be worth buying. So the main reason the stock's been struggling is in August, there was a short seller report that came out from Hindenberg Research, which said that Supermicro is involved in accounting manipulation, self-dealing, sanctions evasion. So basically things related to reporting issues and accounting numbers not being accurate. And what makes things worse is that Supermicro has been involved with accounting issues in the past, and it was even fined $17.5 million by the SEC. So it's not a new issue. And Hindenburg relies heavily on that assumption that basically it's falling into its old problems again. But one thing to consider is that it has a different CFO now. So the accounting department is not going to be the same. And another thing also that I don't like about the short report is that it relies heavily on data from sales reps. So if I just do a quick search for salesperson, it talks about a former salesperson told us this, a former salesperson described this. Again, a former salesperson told us this, right? So the problem is sales reps are not going to know about the intricacies of different accounting policies and whether accountants reported revenue properly or not. And let's face it, companies are always going to be aggressively trying to post as much sales as they can for a period just to boost their numbers. And so it may not necessarily be a big issue or as big of an issue as it was in the past. At worst, Supermicro might face another fine if that turns out to be the case. But right now, I wouldn't be too concerned with the short report just because any short seller report is also going to be biased and relying heavily on assumptions because short sellers have a huge financial incentive from making you worried about a stock, because if they shorted a stock then and the stock then proceeds to fall down, then they have to buy it back but at a much lower price. And so that means they're taking a huge profit there potentially. If they shorted a stock, it goes down, they buy it back to cover their position. Now they've made a huge profit. So the idea of scaring other investors or making people panic to sell their shares goes into their favor. They benefit from that. So that's the reason why I wouldn't be too concerned with the short report. There's nothing really here that's going to be that concerning, just because Supermicro is generating so much revenue growth. Even if at worst it's being a little bit too aggressive in reporting some sales, that's probably not going to change the overall financial picture or have a significant impact on its numbers. And again, the bias factor of short seller reports is another reason to take it with a bit of a grain of salt and not worry too much about it. The one thing that does concern me about Supermicro are its recent financial numbers. So when it reported earnings back in August, net sales were amazing, $5.3 billion, and a year ago it had almost $2.2 billion. So more than doubling its revenue in a year. So that's massive. So it's a provider of AI servers, a lot of IT infrastructure. So as companies are building out AI models, investing in tech, it's been benefiting significantly from a lot of those investments and that growth. But the one thing that doesn't look great are its margins. So it was 11.2%, its gross margin, compared to 17% a year ago. So if a company has a low gross margin, that's problematic because it might mean that they're offering too many discounts. They're not pricing their products high enough to make a good profit on them. And obviously you need a good gross profit to cover overhead, other expenses, and of course get to growing your earnings. If we look further down, we can see the company's income statement here. So we see that big net sales increase from almost 2.2 to 5.3. Their net sales was up almost over $3 billion. So it's a significant increase in revenue, but you can see their cost of sales also had a big jump. And that means their gross profit, went from $371 million to $596 million. So not even a $300 million increase, despite growing revenue by more than $3 billion. So that's not a big increase. to gross profit. And when you look at it, their net income was only 350 million. Imagine if they had an extra 300 million in that bottom line, their profits would double. They would look like a really amazing valuation in terms of their earnings. So that's where even a few percentage points can make a big difference for the company. So that's the main thing that concerns me a lot more than the short report, just because if its margins don't improve, then all that revenue growth, as impressive as it is, isn't going to necessarily mean as much for its bottom line. Now, that being said, Supermicro did generate a whole lot of earnings growth, but in the future, as it goes up against these stronger numbers in a year and a few quarters, then it's going to be a whole lot more difficult to generate as much earnings growth if those margins remain small. So that's the main thing I'd watch out for the next time it reports earnings, to see what those margins look like. So is Supermicro worth buying right now? So if we look at its financials in terms of valuation, its market cap, 26.5 billion. It's trading at a price to earnings multiple of 23, forward PE of 14. So that's fairly low for an AI stock, especially one that's generating the type of growth that Supermicro is. So I think it is an underrated stock to buy right now, just because the short reports weighing heavily on it and concerns about its margins are impacting it. But even if it just makes a modest improvement in its gross margins, potentially increasing prices, offering fewer discounts, that can mean a significant increase in its earnings just because of how strong its top line growth is. So I think there's more reasons to be optimistic about Supermicro stock right now than there are to be bearish on it, just because there's already a lot of negativity priced into the stock right now. And with such a low valuation, I think it has the potential to generate a lot of earnings growth, and for that valuation to look even better after it reports its next quarterly results. So as long as you're willing to take on some risk, I think Supermicro could be a great stock to buy right now.